Welcome to this week's edition of Insider Secrets, the show that turns multifamily investing into reality. Each show we interview guests who are seasoned professionals, actively closing and managing real estate deals. Your host, Mike Morawski, has more than 30 years of multifamily real estate investing and property management experience. Mike is the founder of My Core Intentions and has been involved in over $285 million of transactions. Focuses on helping you create short-term cash flow and long-term wealth. Here's your host, Mike.
Hey, good afternoon. This is Mike, your host of Insider Secrets. And Insider Secrets is brought to you by My Core Intentions. Welcome, everybody. Good to see you today. Hey, have you been thinking about your real estate intentions and where you want to go? What's your why? Now, let me ask you this. Why does that really matter, right? In life, in business? At MCI, we invest in our clients' future through an educational platform. We teach you how to create short-term cash flow and long-term wealth, empowering you to execute sound real estate investing and property management principles while living a balanced lifestyle, developed on a strong foundation of practical principles. I share many of those principles in my newly released book, Exit Plan, your complete guide to multifamily investing and why you need an exit plan before you buy. You can pick up your copy today on my website. If you are looking for some direction, My Core Intentions would like to help you get that direction and help you execute on it. So what I'd like you to do is just reach out, send me a message, either text me or email me, and we'll set up a time to get together. Hey, listen, you guys, I'm really excited about today. My guest, good friend, multifamily syndicator and capital raiser, Ruben Greth. Hey, Ruben, say hi real quick to everybody, would you?
Hey, how's it going, everyone?
Glad you're here today, buddy.
Yeah, man.
Hey,
thank you for the invite.
Yeah, you bet. Hey, Ruben is a real estate entrepreneur with partners who qualify, with partners who are qualified investors. He raises capital and syndicates real estate deals. Ruben has his own podcast about raising money for multifamily syndications called The Capital Raisers Show, where he learns best practices from successful syndicators and multifamily investors. He's a capital manager for Bakerson and does marketing, brand awareness, and capital raising for the company, who has purchased 850 units in Arizona, and many of those through syndicating apartment communities. He originally got started in the real estate business by raising $650,000 of joint venture money from social media to buy small multifamily deals. On our show, we like to talk about the small multifamily deals.
Nice.
But he's in Phoenix, and he did all of that during the real estate crash, which is even more exciting and compelling. So he's got a bachelor's degree from Arizona State University, and get this, in chemistry and Spanish. So here's what I want to know, Ruben. How do we go from chemistry to real estate? Although we could have an explosion from time to time, but how do we get there? So I'm impressed by that. If you want to just describe to our investors, and first, here's one thing I always ask everybody is describe in one word for us your strategy professionally in the real estate business.
Syndication.
Okay.
I guess that would be the easiest one-up word to describe what we are doing and the difference. That can mean so many things and how you raise capital. It can be done a variety of ways. I'm sure we'll go into that. But you asked a question, how do you go from chemistry to real estate? I don't know. Is there some chance for me to tell a little bit about my background so people can understand how I took that road from chemistry to real estate?
Yeah, absolutely.
Awesome.
I'd like you to get into that right now, if you would too, please.
Yeah. So number one, thank you for having me on the show, Mike. I'm really looking forward. Actually, I'm going to be recording you on my show after this, so that should be a lot of fun too.
Yeah, right.
But we'll take a step back here. So as I was going through college, it was taking me a long time to graduate from Arizona State with my degree in chemistry because of the prerequisite math and physics. And I realized it was going to be a long road. So I'm like, let's just add another major to it. Because I had some Spanish background, both my parents were born from Mexico, I decided to study literature. And in the time that I was getting my chemistry degree, I did a lot of literature classes, picked up quite a bit, and then moved into, after graduating from college, into mortgages, thinking that would be a good avenue and stepping stone into real estate investing. But what I soon found out was that all I was really learning was how to be a salesman for a corporate bank. And so I found this real estate group, and it was an educational platform. I learned about, I don't know, 15 to 20 different single family strategies. And they also had one course on multifamily investing. And I had started a Meetup to attract people to myself, because I knew that building a network, even way back then, was going to be probably a good idea for me to grow in anything that I did, as long as real estate was the premise behind it. And I had this individual come from San Diego with a bankruptcy, and he was purchasing all these fourplexes. He lost all his money in spec homes out there during the crash. And I couldn't figure out, coming from a mortgage background, how he was purchasing all these fourplexes. It seemed like he had one every other week he was purchasing. It's a great time to buy during the crash. We're talking about 2009, 2010. Units here in the Phoenix market were like around $20,000, and you could cherry pick them right off the MLS. So it was very fun time. And he invited me, or I should say, I asked him, hey, can I go to your projects and basically film you talking about how you found it, how you acquired it, what the business model was, how you were going to reposition it, how you were going to, that had to do with the multifamily deal itself. And through that process, with the intention to raise capital, but without ever asking for capital, people started seeing our business and saying, wow, I want to be a part of that. Phoenix seems like it's a crazy time because we're in the crash, but wow, are you telling me that we can cash flow astronomically purchasing these units at $20,000 that really don't have a lot of work to do in order to get them back to stabilized product? And sure enough, that was what was going on back then. And we took down I think he took down about 70 units consisting of small multis. And I participated in about 20 or so units, a 3-plex here, a 4-plex, a 12 unit. And that was my introduction. He was so excited about me marketing and raising capital that he's, hey, we don't need 2 underwriting machines. Why don't you focus on the marketing? I'll focus on the acquisition side of things. And that was going to be a great partnership, right? So I found a guy that was going to write us a book. We were going to do an email drip campaign. We were going to go on tour. We even flew a producer in from San Diego to basically start recording a pilot that we were going to pitch to A&E, and everything was great. But then one thing happened, which was he started getting over leveraged and not outsourcing. So he was very focused on micromanaging all of the contractors. And we got to a point where we could no longer scale, and he would not show up for our business meetings with the marketing people that I had already invested money in to grow our business. And we started fighting. And that was my first experience with a real estate divorce. So I left the real estate space for a couple of years, went down to Mexico, took some time off, came back in 2014. And then somebody had challenged me because all I knew was fourplexes, and I came up with a business plan. I'm like, I want to buy 32 fourplexes. I've done it in the past, and I want 128 units total. I figure that's going to produce enough cash flow and give me the opportunity to make an impact in the Phoenix market and multifamily market, and create everything that I need to make as much money as I want for the rest of my life. And I showed that plan to them, and they said, why don't you just take them all down right now? And I'm like, what do you mean? This is you buy one and then you double your portfolio every couple of years. He's like, no, multifamily is a team sport. Go out and syndicate it. And then I heard the word syndication. It was like, okay. I was still a little bitter about my relationship, but I started opening up myself to the concept that, hey, this is a business that requires multiple team members. So I started interviewing people, gurus that taught multifamily syndication, and then even some local people. I had a license to sell real estate at the time, and I asked my broker, I'm like, hey, you've sold some properties to some big people before, people that syndicate. Who have you sold a deal to? And my broker was like, I sold a $5 million property to Bakerson last year. I'm like, can you set up a meeting with them? So I end up coming and interviewing this local team of syndicators. And I was like, hey, who do I need on my team? And they're explaining it. And then they turned it around on me, and they're like, why do you want to know about syndication? I'm like, I've raised some capital for a multifamily as a joint venture in the past and want to translate my skills and find the right partners to work with. And they said, you don't need to look anymore. Why don't you just come work with us? And I said, oh, that's fantastic. So that was the introduction to Bakerson and the beginning of the Capital Raisers show. At that point in time, I was like, I need to learn how to get capital for these deals for Bakerson. They were in a situation where they were outgrowing a lot of their investors that they had accumulated over the years. So I started the show and then discovered about limited partner capital and how that works in regards to raising money and the differences between raising for syndication versus the way that I used to raise for small multifamily deals, which was typically a joint venture structure. So it was a very interesting learning process, and I've learned a bunch, and we can go into some of the details of either that model or some of the other models that I've learned. It's been a lot of fun.
Yeah, great. Boy, that's a lot of information. Thank you. I really like what you said, though, that multifamily is a team sport. I don't know that I've really heard that before. I've been in the industry 30 years, and I really think that's a great concept and a great way to look at it. And the other thing you talked about was a real estate divorce. I always talk to people about, hey, don't fall in love. Don't get involved in a deal that you're going to have an ugly breakup with because the red flags that you ignored along the way. And I think that's really important, is that we pay attention to that stuff and not get married to the deal. What I like is that your focus has been on small multifamily. And from there, it sounds like you made a transition from small multifamily into larger properties and to the bigger stuff. Can you talk a little about that transition?
Yeah, so that's a big mindset hurdle that people have to go through. So it's actually two hurdles. One, if you've ever had a real estate breakup and you want to continue in the multifamily space, you're probably going to need to find some different partners, even if you're bitter. The other part is a lot of people struggle going from either single family or small multifamily and making that breakthrough into large multifamily syndication, particularly if nobody in your family has ever done or taken down a $5 million deal, right? So that's such a mental hurdle. Now, instead of taking down a $100,000 house or a single family or multifamily deal or a 200,000, now you're, multiplying that by 100 and taking down $20 million deals. So in order to get across the finish line, one of the only ways to do it is to partner with somebody that has already built that road for you and see if you can add value, which is what I did. I entered into agreement with a company here and provided brand awareness, marketing, capital raising, and those types of aspects. And they were very excited about that because that wasn't their particular strength, even though they had raised $50 million for real estate in the past. So that's how I got in, is I just joined forces with the team that already had a track record and did so by adding value to them.
Yeah, excellent. That's really great. So what do you think that your biggest, you mentioned mindset, it's a mindset hurdle. What do you think along the way your biggest hurdle has been when it comes to mindset? Because I talk to people about this all the time, right? Is that you have to have that shift in your own mind and understand that you can accomplish something and go ahead and go for it. I like the way that they encourage you, hey, just go do a syndication. Go do your own, right? Take them all down at one time. And so what do you think your own biggest hurdle was, or mindset hurdle that you've had to get over? And are you dealing with something today?
Yeah, so I would say a lot of people, including myself, start with limiting beliefs of what they're actually capable of, what their actual ceiling is. So for me, after my real estate breakup, I was thinking, this was the mindset that I had. The limiting belief that I had was multifamily partners don't grow on trees. Like, where am I going to find another partner? They're not like growing everywhere. You can't just go into a real estate meeting and say, hey, I'd like to be your partner. There's so much synergy and things that have to align into place to find that. And that was, for me, a limiting belief. Now, having had my show for over a year, I've interviewed 100 plus syndicators, and I've realized that these people are not hard to find. In fact, you can go on anybody's podcast, and at the very end, they almost always give this some form of contact information so that you can get a hold of them. What I've discovered is that if you talk to enough of them, you can find somebody to align with. And that's actually one of the things that I've been focused on, is finding some partners that can bring their capital and their database of investors from the co-GP or co-sponsorship perspective. So that's starting to really take off right now. We've got a lot of people in our database that want to either have a fund or want to bring their investors along for the ride in our deals here in the Phoenix market and the Tucson markets as well.
So Ruben, let me ask you, can you explain to our listeners, because some of our listeners are newer investors or just getting in the investing world. Can you explain to them what the difference between active investing and passive investing is?
Yeah, so I got that question just the other day where they weren't too sure what a passive, they were almost like trying to relate it to a stock market investment. So like you put your money into stocks and I'm actively putting that money in there. So that means I'm an active investor, right? And in the real estate world, it's a different concept. When you passively invest, you're giving your money to somebody that's going to basically run the project for you, and you take a back seat. You don't have investment decision making capacities. You're basically entrusting some company to do everything for you. And that is called a security. So just like a stock investment, if you give your money to somebody else to manage it for you, then there's all of a sudden all these legalities that you have to, I should say that the sponsor or real estate investor that controls the project has to go through in order to legally take money from you, particular if they're doing it for more than one person. The active investor is the person that actually is the person in charge of the project. So he's the person, or they're the people that go and find the property, that lock it up, that create the resume and investment summary and create what they design for returns and have the vision for the construction management or rehabilitation of the project, so that as they remodel multifamily apartments, they can increase the rents, or by lowering the expenses from the helping of getting utilities lowered, or increasing the RUBS, which is the rent utilities bills, and those things, and lowering the expenses on the management. That increases the net operating income of the property. As you lower expenses and increase rents, that affects the business, because multifamily is ran more like a business. It's the way that you value it is more as a business than it is from an appraisal model, a cost approach, or neighboring property approach. So that's the difference. Is basically, if you're active, you're the one that's in charge. If you're passive, you're the one that's giving your money to somebody and basically collecting a cash flow and tax benefit from, partnering up with that. And that's actually a mental breakthrough in itself, because a lot of people think that, oh, I can't invest in a multifamily property because that's what millionaires do. But they don't realize that they can actually just team up with people that have experience doing these $1 million projects, and then partner with them and receive all the benefits that an investor would, in some cases more than you would just doing a single family dwelling or flip or fix and flip or something like that. And yet have it be completely hands off, where you're not doing anything except collecting a check. So that's a beautiful thing in this business.
So do you think that it's a mindset shift for that investor who says, man, I need to have my hands in it. I need to be doing this myself. And being a mindset shift, do you think that there's more money on the passive side for an investor, or is there more money on the active side? And I think there's a lot that goes into that, because it's not just money. There's some time freedom that comes with being a passive investor. And you don't have to worry about a lot of things, where when you're an active investor, you're worried about tenants and those phone calls and things like that. Talk about that a little bit, though.
Yeah. So in a typical syndication, the sponsor or promoter, there's a couple different words that people use to identify the actual person investing, but let's just call them a sponsor. And they typically do a split with their investors, where the investors, the passive investors, get 70% of the deal. And so why do they do that? Because they, in order to manage the property and find it and do all those things, they get some fees to keep the lights on in their business. They get an acquisition fee and a disposition fee and a management fee. The investor gets the majority of the profits. If you're talking about a 70% split, they get the majority of it. So from that perspective, the investor actually makes more than the sponsor, but the sponsor, because they get some fees, they can keep the lights on too. So in order to scale, you have to take down a bunch of these properties. And this is an avenue that helps the passive investor get it associated with somebody that can do that. And then from the active investor side, the person that's managing the property, they get the capacity through years of doing this and building a track record to go and purchase more and bigger properties in larger, more diverse areas. That
Yeah.
makes sense?
Yeah, it makes a lot of sense. Thanks. So this show is called Insider Secrets, and we run this on Tuesday afternoon at noon. And my whole premise behind it was I wanted to share those intimate secrets that maybe a syndicator or a capital raiser has that your average investor takes them years to figure out, or they maybe don't even learn sometimes. Give me one insider secret that you would otherwise hesitantly maybe not share with somebody.
I would always be willing to share anything. I'm an open book. I think most people in the multifamily space have that abundance mentality.
Yeah.
One thing that, though, if you're coming from the same area that I was, which was a single family dwelling or small multifamily, residential multifamily mindset, that I didn't know about syndication before I started was the difference between how you raise for small deals and big deals. So my thought process before, which you've heard, I'm sure, a lot of times, is if you find a good enough deal, the money will come. I think that will work in small deals, but that mindset does not work in a more complex, larger syndication type deal, because people need to receive communication. They need to understand when am I going to get my returns? Am I going to get cash flow? What are the tax benefits? What is cost segregation? How does that apply to me? And what does it look like and feel like to invest with you? What's the experience I'm going to get? In the smaller deal kind of capacity, oh yeah, house is worth X, the rehab's going to cost this, we can sell it for Z. That makes sense to me, pretty easy for me to understand how I'm going to get my money back. In the world of syndication, there's this process that you have to go through. It's not like just raising money and taking a property down. There's financing, there's all kinds of other things that it makes it more complex. So that's why you really want to get involved with somebody that has a strong track record and that you can trust. And this is the way that most syndicators raise capital. They take their investors through a 4-step process. They get them to know and trust the sponsor, which is basically a process of educating them, having investor communication. And then the second part would be to explain why you like multifamily. What are the inherent benefits? Why do people invest, or why do we invest in this specific asset class versus movies or stocks or self-storage units or RV parks or any other kind of property that's not multifamily? So once the person goes through that education background and gets to find out why this is, and aligns with it, oh yeah, maybe this makes sense for me, maybe it doesn't, then you take them through the process of explaining, this is step 3, explain what it looks like to invest with you. So get people to know and trust you, explain why multifamily, explain what it feels like and when you're going to get your money back, what communication is going to be like. And then you take people through those 3 steps before you do step 4, which is present the deal. So a lot of people will say, hey, present the deal. If the deal's good enough, the money will come. But in the world of syndication, you have a hard time getting people to invest with you unless they know what that investor experience is going to be like. And especially if they don't know and trust you already. So it's a different type of capital raise in that type of world, right? In the multifamily syndication world, than it would be for, hey, here's $80,000. Let's go take down a small house or a multifamily unit.
Yeah, right. Yeah, it's a big difference. So I like that though. I like those 4 steps. Find them, get them to know and trust you. And that's with anything really. You want to get
Relationships.
your client, your associate to know and trust you. And then what are the inherent benefits? I really like that. I think that it's important. People need to understand, because there are a lot of great benefits by being a passive investor. And then what it looks like to invest with you, and then the deal. And I think there's some secret sauce in that, right? So
Yeah, this is what I've learned along the way. The first 40, 50 episodes of my show was all about understanding how to raise limited partner capital. In other words, there's these people, they're called limited investor equity partners or limited equity partners. That is the passive investor. They are considered partners. They get a lot of the same benefits as the sponsor. They get the tax benefits, the ownership rights to some of the property, maybe not the decisions, but in terms of real estate tax benefits, you can cash flow a lot of times without having to pay taxes on them if you get the right write-offs. Obviously, you would want to talk to your CPA about that, but there's all kinds of benefits in multifamily that people need to be aware of.
Let me ask you this. Are there any specific ways that Bakerson builds a strong brand awareness or personal brand awareness in the marketplace?
Yeah, when I found them, they had a lot of values and core intentions and focus on the resident and focus on the investor experience, but they did not have a strong social media presence. So that's where I helped with my podcast. We have over 26,000 downloads as of November of 2020 and growing about 3,000 to 5,000 podcast episode downloads per month. So that really helps people find out about us. The social media, honestly, it's a relationship business. So I'd say going and networking, and obviously in the COVID world, you have to do that virtually, but there's plenty of places to do that. And the more people that you meet, the more time that you spend on there getting to know you, the more that in our case, a national presence is established, where a lot of the brokers around town and in Tucson, Phoenix and Tucson knew us, but a lot of the syndicators, a lot of the potential passive investors around the country had never heard of Bakerson. So it was very fortunate for me that I found a company whose values I aligned with, and now I get to share those values and the story of Bakerson, which has an interesting background too, because it was partly the CEO was paying homage to his late father and grandfather who were bakers. And also it's been a lot of fun talking about the different values and focus on our residents. So that really helps us stand out in comparison to other syndicators.
Nice. Yeah, it sounds like a great story. It really has been. How about a couple of tips on the best ways today to go raise capital? So there's a lot of people raising capital out there today. And with the changes in the rules in the SEC and guidelines over the last several years and crowdfunding and things like that, there's people out there, a lot of people out there raising capital. How do you make yourself stand apart from everybody else out there today? And what techniques are you using to raise capital?
Yeah, so some of it in the world of syndication, as we talked about, it's a more complex structure. So when you move from single family into multifamily, you have to adapt and bring in technology and underwriting softwares and have a visual presentation that people can follow along with. But I would say some of the big things are mindset related. Just like in any sales business, most people will buy your product or invest in your deal for emotional reasons rather than logical reasons. They will buy emotionally and justify it with logic. But you see a lot of syndicators, they have pictures of buildings on their websites, and then they do these presentations, these webinars to raise money. And it's all numbers and waterfalls and structures and market analysis and why this and why that. And it really doesn't tap into the whole reason why people invest in multifamily to begin with, which is all the emotional reasons, that time freedom, that's spending time on the beach and being with your family and being able to have some passive income without working for it and getting that cash flow. So all of those things are very attractive, but when you're just drowning people with numbers and hypotheticals, I think you're just a syndicator in the sea of syndicators, right? An investor in the world, large world of other investors, and it's hard to stand out. So one of the things to do is have an investor focus, explain, find out why people want to invest, tap into their emotional needs, their wants, and really find out what it is that they're looking to accomplish through multifamily. And when you can find out that stuff, you can see if aligning with you makes sense for them, and if the cash flow that comes with multifamily and the passive investing or active investing as a partner makes sense. Tap into the emotional needs and really educate yourself. If you want to become active or raise capital, there's a lot of ways to do it. So on my show, we talk about limited partner capital, we talk about institutional capital, talk about fund creation, we talk about joint ventures. There's all these different ways. And the first thing I would say is potentially educate yourself. And then once you get educated, the way that you'll have more success is if you tap into the emotional needs of the investor.
Yeah, interesting. Thank you.
You
So
bet.
what are the next steps for Bakerson? So if Bakerson's looking out 3 years, 5 years, 10 years, and I always work with people, I say, hey, you know what? We have to have plans and goals. We have to set those short-term 1-year goals. But where do you see yourself in 3 years, 5 years, 10 years?
Yeah. So and interestingly enough, your goals can change along the way. So we started out with a heavy reposition or a heavy lift kind of value add property style where we were taking down 75 units in that range and fixing them up, super low vacancy as we restored it, and then fix it and sell it and make a good investor profit, which is one style of investing. Now we're moving into larger properties that aren't quite as heavy lift, and then just stabilizing them and keeping them forever. So we've gone full cycle on 16 deals. We currently have our 17th deal, 90 units down in Tucson, and that's the first property that we want to keep forever. So we're not looking to sell it in 3 years. We want to just keep on building that portfolio. Over the next year, we'd like to acquire 1,000 units. It's a lofty goal. However, we're looking to do it. And part of that is done through building relationships with other people that can help you scale. And that can be institutions, family offices, or in our case, the co-sponsor, which is the partner that comes in, brings in some equity, and then has some management duties so that they can stay compliant with the SEC regulations. So yeah, 1,000 units. And then over the next 10 years, we'd like to get to 10,000 units. Whether we do that all in Arizona, that's very unlikely. So we know that we're going to have to scale into some new markets like Texas and maybe the Southeast. But yeah, 10,000 units is the goal, and to bring some investors along the way and get them rich and receiving lots of passive income. Yeah. So it's going to be a fun journey.
Great goals, that's for sure. Lofty. How about personally? How about for you personally? Where do you see yourself?
Personally, over the next year, I'd like to start acquiring assets to the point of accumulating $5,000 passive income. So that would be very exciting to me. And over the next 10 years, I'd like to raise that number to 25,000 and then help a lot of people get rich along the way.
Okay. All right. Interesting. Good for you. That's great. What advice today would you give a new investor? And here's the context I want to look at that in, right? Is the world in the last 8 months has gone through some changes here. And with COVID and the pandemic, I think 8 months ago, 6 months ago, you would have given a new investor different advice than what you would give them today. Coming into the market as a new investor, specific advice you'd give somebody today?
Yeah, if you're transitioning or opening your eyes and moving away from the roller coaster ride that is the stock market and Wall Street, and looking for some ways to get into real estate, you may start off with a single family kind of mindset. But my advice to the beginning investor that wants to scale, to get bigger, faster, stronger, is to look into the world of syndication and being either a passive investor or maybe even start as a passive investor if you're trying to figure out how to actually do the deals yourselves. Learn what it's like, have the curtains, pulled back, to look into the operations of a company as a passive investor, figure it out that way, and then basically as you're learning, you can start moving and getting comfortable with bigger projects that you could actually probably do yourself if you align with the right people and or get a coach or mentor, which is not always necessary, but it is typically something that the most successful people do and a fast track to hitting your goals. So I'd recommend either that, become a passive investor, or go hire a mentor or get associated with the community of investors, or get educated on how to either be a passive investor or an active investor in the multifamily space, which a lot of people see it as the most recession-resistant asset class of any real estate class. So check that out.
And I'm glad you brought that up, the coach or the mentor, because I think it's really important. Personally, I've had a coach for 25 years. And even today, I still have two coaches, a business coach and a development coach. And I think it's really important in our lives. Do you have a coach in your world that coaches you or works with Bakerson at all?
Yeah, so our CEO has hired Darren Hardy, and then on the marketing side and development side, I spend time with a group called Real Estate Accelerator that's run by the people at Good Egg Investments, and they coach me on marketing, avatar creation. They hold me accountable to certain things. They help me with the website and marketing, and then they have a personal development coach, Trevor McGregor, that comes and speaks to us. The other types of coaching that I do is I'm a part of some accountability groups and a capital raising book club where we exchange ideas, what's working, what's not. And that's very helpful too, is to have a community of people to plug into that, and networking, just meeting people.
Yeah, when you talk about those communities, there's a group out there called Meetup. And on Meetup, I run two mastermind groups. One's on property management and one is on multifamily investing. And those groups meet on Monday, one week and one the other week. So twice a month each group meets. But mastermind groups are a great way to get information. And in many cases, they don't cost you any money to be involved with. So it's a great way to start to get that mentoring or that execution or education that sometimes we lack. And I'm such an advocate for education because I think we all need to get better by getting smarter. The more we learn, the more we can do. Hey, let's shift this up a little bit and go to a little lighter note. You're out there in the Phoenix market. So let's talk a little bit about your favorite tourist attraction.
Let's see. In Arizona, we're not too far away where I'm located from Sedona, Arizona, which is Red Rock country. I love going up there. There's a creek that runs through town. It's a great place to take your dogs or your family and see some really beautiful scenery. There's a couple other places that maybe nobody knows about along the Grand Canyon. One that particularly stands out, and I recommend checking this one out and doing a little Google search on it, is called Havasupai Falls. It's like this part of the Grand Canyon, the entrance to one of the parts of the Grand Canyon that has this almost like, it's like a phosphorus blue kind of shiny water that almost looks like it glows because it's so clear and beautiful. And there's all these waterfalls all over the place. So definitely I would say Sedona, Havasupai Falls, and the Grand Canyon are great tourist places that I like here in Arizona.
That's awesome. That blue water like that sounds really attractive.
Yeah.
How about a restaurant? Your favorite restaurant, your favorite meal?
So there's this place that I've been going to for the last few years. It's called Via Luna, and it's a Mexican food restaurant. They have this shrimp stuffed chili poblano with all these kinds of Monterey cheeses, and it's just absolutely delicious. It's my favorite plate that they have there. And then they have a lot of, happy hour specials that are great too. So I like that place a lot. I think that one's tops on the list for me right now.
Yeah, love Mexican food myself. So think back now in the last 6 months, most memorable moment that you've had in the last 6 months.
You're talking about professionally or personally?
Either way, you decide.
So let's see. In the last 6 months, I think what's been interesting is the evolution of our company as we just sold a 74 unit and a 75 unit property, and we've transitioned completely to the philosophy of long-term, or what we call legacy investing, or even compound investing, where our investors come and do the deal, get their money back in year 3 or whenever we refinance, but yet maintain ownership and cash flow into perpetuity with us forever. So that shift of mindset has been really huge. I think that's been the most fun part of being around with our group in the last 6 months.
Nice. I like that word, legacy investing. I think that there's a lot of history in that, and we'll create a lot of history moving forward for you guys. Hey, Ruben, I really appreciate you being here today. I really appreciate your candidness and
Thank you.
How much information you've shared with my listeners. If somebody wants to get a hold of you, how do they get a hold of you?
Yeah, so you can find me on Instagram. My handle is @CapitalRaiser. My favorite communication is via LinkedIn. So you can find me, Ruben Greth, at LinkedIn or on LinkedIn, better said, or just reach out to me at Ruben@Bakerson.com, or become a If you want to find out about our deals or our company, get some updates, and join our investor club at bakerson.com.
Awesome. Any last closing thoughts or comments for the listeners?
Yeah, you can do it. Number one, you can do it. Go out there and hustle, do whatever you can to figure out what it is, become aware of what it is that you want to accomplish, get that stuff written down, and then go after it. You can do that in multifamily or whatever resonates with you.
Awesome. Thank you. And again, thanks for being here today. It really has been a pleasure. It's funny how fast the time went today. It feels like it just buzzed right by.
Oh, yeah.
Yeah.
It did go quick.
But listen, I have a couple big things that I really picked up from you today, and that was the mindset piece. And investors really need to think about that mindset shift and getting a coach. Coaching is important. And if you're looking for a coach, I'd love to interview for that. But if it's not me, find somebody to walk you through it and somebody to help you and leave a legacy. Remember, we leave a legacy here every Tuesday on Insider Secrets. We're here at noon every Tuesday. I look forward to seeing you all next week. Ruben, it's been a pleasure. You have a great day, and you want to say goodbye to everybody?
Yeah, thank you so much for listening. I hope that we added some value here. Make sure and tune in to Mike's podcast. This is great stuff, man. Thanks for having me.
Thanks, Ruben.
You bet.
Thank you, Mike, and thank you for joining us for another great episode of Insider Secrets. As always, Insider Secrets is brought to you by My Core Intentions. Join us on social media and visit mycoreintentions.com, where you can get expert coaching on all things multifamily investing and property management. We're looking forward to having you back again next week for more Insider Secrets.